bottom line earnings number I think is a little bit misleading. I think one has to bear in mind that during the course of the year they were closing out their hedge book. So if you look at the cost of the unwind of the hedge book in the fourth quarter, that amounted to close to $1 billion, and if you compare that to the full year cost, that was about $2.5 billion. So there was a fairly significant charge that is kind of non-operational. So I think it's not completely correct to say that they were loss making. They were actually, if you add that all back, they did make a fairly significant profit. Operationally, I think all of the results were very much in line. On the production side, for the last quarter, slightly down, about 1% on the third quarter, but overall very much in line with guidance and in line with the market's expectations. On the cost side, again, I think best in class performance from arguably, I think, the best managed South African listed gold major. Their cash costs came in at roughly about $672 an ounce, which is very good in comparison to the peer group, especially if you do compare it to the likes of Harmony Gold. And also the cash flow generation of the group, to me, I think was the standout number, where they generated just in the last quarter about $250 million in cash flow, almost 50% of the entire cash flow generation for the full year, which was just over $500 million, and that is exactly because of that unwind of that hedge book. So going forward, I think the company is most likely just going to go from strength to strength now that the hedge book is out of the way.
Okay, nonetheless, they have had a situation where cash costs have risen by about $672 per ounce. And what sort of bearing has that had on the balance sheet? And going forward, I mean, you're quite bullish about the prospects. Can they continue to work within that range?
Yes. Look, I think I'm probably not that bullish. I just think relative to the peer group, I think that they have managed the business relatively well. If you look at the balance sheet, they're sitting at a fairly conservative gearing. They've got net debt of about $1.3 billion, and they certainly have enough balance sheet capacity to embark on all of their expansion plans and to continue paying fairly handsome dividends, again relative to the peer group, because gold companies do not tend to be very good dividend payers. But if you look at where the gold price is now, close to $1,400 with cash costs of say $670, it is relatively clear that they are going to generate a fairly significant amount of cash going forward. And that is, I think, what sets AngloGold apart from maybe the likes of a Gold Fields and definitely say a Harmony, which needs a much higher gold price to achieve very good cash flow. So I don't think the balance sheet is a problem at all, really.
Okay, going forward, they forecast higher output of at the very least 4.55 million ounces in 2011. They think it could even be higher than that. What have they done to improve on production, and how are they going to continue to do so? And at what cost do you think, given the volatility, or not quite the volatility, but the change in the exchange rate, because we're no longer in very favorable terms?
Yes, definitely. Look, if you look at the production for AngloGold, and if you look at the guidance that they are giving, it's certainly not a lot of volume growth that is going to come through in the next year. I think for the full year 2010, they produced 4.52 million ounces, and as you rightly pointed out, they're guiding 4.55 to 4.75. So if you take just the midpoint of that 4.65, that would imply 3% volume growth. Now, let's assume the average Rand gold basket price remains the same year on year. I think it's going to be relatively difficult for them, because on a cost basis, I think their costs will go up by more than the volume growth, so greater than 3%, and that is mainly due to obviously a lot of wage pressure, especially in the South African operations. And if you look at the guidance that they gave for just the next quarter, because the market tends to look at it on a quarterly basis, because gold companies is one of the few sectors that do produce a quarterly number, they guided of like production just over 1 million ounces, which is quite a bit below the 1.148 million ounces they did in the fourth quarter of 2010. So the implication is that in the second, third and fourth quarter of 2011, they really need to start ramping up their production quite well. Where's it going to come from? It's really going to come from some of their growth projects in terms of their African operations, Ghana, some in like Tanzania, and funnily enough, those are the operations where I think they have experienced the most operational difficulties. Can they achieve their guidance? Yes, I think they can. The cost guidance that they gave us also very similar to the last year, and I would probably back AngloGold to certainly achieve those targets going forward, but it's not going to be an easy ask.
And in 30 seconds, Rhynhardt, prospects for the gold price. I mean, obviously we know with a lot of risk sentiment that started to be pervasive, commodities have rallied, but can we continue to see them rally at some of these high prices that we've seen in recent months? Because certainly that's worked in AngloGold's favor. But is that a situation that is prolonged, especially now that they've closed their hedge book? Have they done that a little bit too soon, possibly?
Look, I think if you look at the gold price in the short term, I think we are entering into the seasonally rather weak period for the gold price. So even though we are long-term bulls on gold, we are, I think, for the next, let's say, 3 to 6 months, we think that there's not going to be very significant dollar gains in the gold price. Longer term, however, we still like it. We don't think many fund managers or investors globally are actually overweight gold. We're seeing lots of demand from the likes of China and India in terms of buying gold, and monetary policy is still very loose, and gold is really just a play on global liquidity, which I think if you look at the long-term picture, I think is relatively bullish. But in the short term, I think it's going to be relatively tough for the gold price to rise significantly over the next quarter or two, with more of a stronger rally towards the end of the year.